Hey everybody, Courtney Smith here with our June 9th Wall Street winners. Great to have you here, always exciting. Let's dive right into it. And this is, you can dive right into this, it's deep, deep, deep. All right, so we got some good bullish price action last week, and you can see that the low was exactly where I told you that it would be. I told you that the bottom of the channel and the horizontal line would be the low of the dip. It was. We've now broken the downtrend line. Now, I'm not a big fan of downtrend lines. I don't think they're all that valuable. But here's the point. We've gotten back up to the high that we made around May 20th. We're right about up there. A break above that would turn us definitely back to the bull side. But we also have to recognize that really we're just in a gigantic trading range right now. I mean, recognize that we're trading at the same price we were back in March. So we really need to get up above that 29.50 high to get back into super bullish mode. But certainly the price action of the last 4 days and the bouncing off of the key support that I pointed out to you was all very, very bullish. Now, that still doesn't make me super bullish. It makes me mini bullish. Okay, that's all. A break above early May's highs would turn me more bullish, and of course, being above the highs of all time would make me super bullish. Now, a really interesting thing happened here, and that was, if you look very closely, you'll see that the green line crossed the red line. And the green line is buying pressure. The red line is selling pressure. This is the first time we've had net buying pressure since the beginning of May. Now, that alone is not, I mean, that is a bullish factor for sure. Keep an eye on it. Also, notice that the Dow Jones surmounted the high that we made around the middle of May, whereas the S&P did not. Well, how about the Nasdaq? The Nasdaq didn't even come close to breaking above the high, but it does have a very strong purple predictor. So I think we're going to see the Nasdaq play catch up to the two other indices on the upside. Seasonality remains neutral. The purple predictor suggests that the IWM, the Russell 2000, which is what we use on our on our seasonality indicator, looks like it's going to be pretty strong. You can see it's leading the market higher right now. And there we are. We're now back into bullish seasonality. Our May dip is over, and now we should be springing up to a high in July. Look for a high in July, then you can see another dip, then another high in September, then a dip into low October, and then the fourth quarter should be super. Well, what can I say? The yield curve remains terrible. We got a little bit of a rebound, but we're still minus 20, and frankly, it's all over. The game is all over. We will have a bear market in, let's call it 10 to 14 months. Asset allocation rebounded. They took money out of the bond market and put it into the stock market. Now, I show this to you every week because it's important to understand how bull markets work. You see, when you get a huge bull market, like look at what happened. We made all-time highs back in April and May, but the asset allocation did not. Right? The high there was in October of last year. And what that showed was that the bond players had run out of gas. They just didn't have enough cash to come in and keep the bull market going, because a bull market requires new cash all the time. It's got to come somewhere. It's got to come from cash, or it's got to come from bonds, or a little bit will come from gold or under the mattress or selling your car or mortgaging your house. But the big ones are cash and bonds is where the money comes from. So our stock market RISKDICATOR, even though we got that strong rally, it was not, the market still didn't want to take any risk. So they bought a lot of stocks, but they bought conservative, safe haven stocks. Once again, I'm showing this to you to understand what's driving this market. Is it people are frisky and they want to take a lot of risk and they want sexy technology stocks? No, they want boring stocks. boring stocks. They want gold stocks. Global shares also about the same strength as the U.S., so I'll stay focused on the U.S. Bonds took a dip. Now I'm going to show you some volume analysis here. We got the skyrocketing market a week ago on heavy increasing volume. Then the market sold off for 2 days, and look at the volume went down. Then we started to go back up. The volume starting to go back up again. I'm viewing that as bullish. I'm looking for bonds to continue to move higher, but I'm not going to be a buyer at these levels. Bond key factors, 3 out of 4, 2 out of 3, I should say, remain very, very calling for much weaker interest rates. The blue line, the chart itself, both going down. The blue line is 10-year treasuries in Germany. The chart itself are commodity prices. They're collapsing. Oil, you know, a lot of commodity prices. What can I say? Copper, etc., etc. The only indicator suggesting higher prices, higher yields, I should say, is gold. That's the gold line. And notice how it broke above a previous high. The dollars come under pressure, which, of course, is why gold is up so strong. But I'm just not excited about trading it. Now, gold took off just as I told you. As you know, we're long. We've gotten really to the objective of that gigantic wedge formation that's on the chart. The objective on a wedge formation is where the wedge formation starts, and that was about 1350. We've reached that objective. We're running out of gas here in gold. I think we'll probably consolidate for a little while. But I'm going to hold gold for a longer term play. I'm not going to get out of my long gold position. I'm going to stay with it for now. Gold key indicators, what can I say? Look at the bottom one and the top one. They are screamingly bullish right now. Only the middle one, which are commodity prices, are going down. Crude oil is one of those commodity prices. It looks to me like there's still this whole Russia-Saudi thing going on. I think we'll probably drift a little lower, but down in this area, 50 to 55 should see consolidation, and this should be the bottom in this area for this dip in the price of crude. Bitcoin, well, I think we've reached our top, but I'm a very disciplined trader. So look at how the purple predictor is running sideways now. I pointed this out last week, and we haven't made a new high in a week and a half. So at this point, I think we have to remain long, but I would move the stop loss up to 6,800. That would lock in almost a $3,000 profit. And then I think we're going to, no, you know what? And then we'll raise the stop up again next week. But I think we've run out of gas. I think the Bitcoin miners are going to start cranking up their Bitcoin mines and start to produce a lot more Bitcoin. So the supply is going to start to increase here. So I'm still long. I'm not strong. All right, everybody. Orlando, Stock Financial Freedom System, we had tremendous crowds in Vegas and Los Angeles. Looks like we're going to have tremendous crowds in Orlando, so please make sure you get there. And we have a new event coming up in Las Vegas for Stock Financial Freedom System. We have confirmed, it says on here tentative, our master class for stocks. It's now 3 days long, same price. 3 days long, and we are going to do it in Los Angeles. We're not going to do it in Las Vegas or Orlando. We're going to do it in Los Angeles. Option Success School. We had a great time a week ago in Los Angeles. Everybody had a great time. I had a great time. Orlando's starting to fill up, and we've just put on Las Vegas. It still has lots of seats available, but Orlando, it's going to sell out. It's going to sell out. And then our Options Masterclass, also, we're going to do that one in Los Angeles. Now, if you look really closely, October 5th to 7th, then October 11th to 13th, couple things. First, there's a few days in between, so basically you can come and stay for the week and take both classes and only have a couple days in between for you to party in Los Angeles. And notice it's also a 3-day event now as well. Who knows? It may end up being a 4 or 5 day event, but right now, 3 days of pure options ecstasy. And of course, our bear market class, very important that you do this because, as I say, we will have a bear market. All right, that's it for me, for freebies, fully paid up members. Hang on there 1 second, and I'll get right back to you.